Today, let's talk about pensions. I left the Philippines 20 years ago to work abroad. And like many OFWs, I abandoned the Social Security System, or SSS, thinking that I'd never need it again. But here's the truth. Ignoring your pension is a big mistake because you can't work forever. And a lot of people don't realize this until it's too late. If you're an OFW in the UK planning to retire early, or you just move here and want to understand how the pension works in the UK, or if you're someone who's serious about building a solid retirement income, this video is for you. We're going to talk about the what, the why, and the how. What pension tools are available to build your retirement fund here in the UK? Why you shouldn't rely solely on the UK state pension, and how I'm personally building my retirement plan step by step, so that if you've got pension gaps or you want to build a solid retirement income, keep watching. My name is Ador. I'm an OFW living in the UK. 20 years ago, I made the biggest move of my life. It was my first trip overseas and landed in Singapore. Singapore is where I had spent most of my early career. Back in Singapore, they have the Central Provident Fund, which I think one of the best structured retirement systems in the world. It was mandatory, automatic, and stable with guaranteed top-up from the government. So for many OFWs in Singapore and even Singaporeans, CPF is not just a pension plan, it's a safety net. But after 10 years in Singapore, I had to give that up because I made the second biggest move of my life. I left Singapore and moved here to the UK. And that left me with a big gap on my retirement. And that made one thing clear. I needed to rebuild my retirement system from scratch. Why I need to build my own pension plan? Let's be honest, the UK state pension is not enough. And it depends entirely on your national insurance contributions. To get the full state pension, you need at least 35 years of contribution. If you contribute less, you get a partial amount. But if you've contributed for less than 10 years, you will not qualify at all. So, if you're new here to the UK or plan to retire early, you may not get the full benefit or anything at all. That's why I decided to create my own plan. My version of CPF that I left in Singapore and SSS that I also left in the Philippines 20 years ago. But this time, I'm in control. I'm doing this in 3 ways: LISA, Lifetime ISA, Salary Sacrifice, and SIPP, or Self-Invested Personal Pension. Let's walk through each one. First, Lifetime ISA or LISA. The Lifetime ISA is a government scheme to help you save for your first home or retirement. In this case, I'm choosing retirement. You can save up to £4,000 a year, and the government gives you a 25% bonus. So for every £1,000 saved, you get £250 bonus. But if you maximize the 4,000 limit, you get 1,000 bonus. And you can do this every year until age 50. And the best part of LISA, say you start at the age 18, you could get up to 33,000 in bonuses over your lifetime. But to access the money penalty-free, you must use it to buy your first home or wait until age 60 for retirement. You will pay 25% penalty if you withdraw early for other reasons. But we're saving for retirement, so let's avoid the penalty. So to open a LISA account, you can choose either a cash or investment LISA. A cash LISA is safer but limited growth. At the time of recording, here are the best cash LISAs available in the market. The other and better way, in my opinion, is to open an investment LISA. This allows for long-term returns. There are different platforms for Lifetime ISA available, but I choose an investment LISA with Hargreaves Lansdown. With Hargreaves Lansdown, my savings and bonuses are invested in global funds. So here's how to open one. Visit their website, hl.co.uk. You search Stocks and Shares Lifetime ISA. Open your account. It takes about 10 minutes. then you fund it via bank transfer. You can choose to invest in popular index funds like S&P 500, the Vanguard All World Index Funds, or iShares World Indices. Hargreaves Lansdowne, the platform, will claim your bonuses from the government and deposit it automatically into your LISA account. You don't have to do anything. Now, the second way I'm building my pension plan is through my workplace pension via salary sacrifice. If you are an employee in the UK, you are auto-enrolled in your workplace pension scheme. The minimum contribution is 8%, 5% from you as an employee, and 3% from your employer. But honestly, 8% is not enough, especially if you are in your 30s or 40s. I mean, if you're starting out in your career in your 20s, it might work. But just to give you context, Singapore's total CPF contribution is around 37%. So using that as a comparison, I needed to make up for that gap myself. And that's where salary sacrifice comes in. So what is salary sacrifice? This is when you ask your employer to deduct extra pension contribution from your gross salary. That's before tax and national insurance are applied. Why it's powerful? Because it lowers your taxable income. You save on both income tax and national insurance. For example, your annual salary is 50,000 and you do a salary sacrifice of 10%, that's 5,000 pounds a year. Your taxable salary now becomes 45,000. By doing that, you save 1,000 pounds in income tax and 600 pounds in national insurance. That's total savings of 1,600 pounds. But it gets even better. Your employer also saves national insurance, about 690 pounds. So if eligible, you can ask your employer to add this to your pension too. So the total potential pension saving is 2,290 a year. So this makes salary sacrifice very efficient, especially for regular employment income. The third way I'm building my pension plan is through SIPP, Self-Invested Personal Pension. SIPP is applicable if you earn income outside employment like freelance work, consulting, rental income, because you don't have access to your employer pension schemes. That's where SIPP comes in. SIPP lets you build your own pension and manage it yourself. This is perfect for self-employed or side hustle income. Why I use an SIPP? Number one, tax-free growth. No income or capital gains tax. Number two, tax relief from HMRC depending on your tax band. For example, let's say you contribute 1,000 pounds to your SIPP, you get 200 pounds tax relief from the government. If you are a higher taxpayer, you could get up to 400 pounds total tax savings. I use the Invest Engine platform for my SIPP. So here's how to open one. You click on the link below in the description, choose SIPP, you fund your account and pick your ETFs to invest. Invest Engine claims the 20% tax relief for you. You don't need to do anything. But if you are a higher taxpayer, you can claim the rest via self-assessment. So if you're new to the UK or left a pension scheme like CPF or SSS from the Philippines, don't panic. You can rebuild one yourself. You can take back control of your finances. So to recap, here's 3 ways you can build your pension plan. First, LISA. With LISA, you can save up to 4,000 pounds a year. You can choose cash or investment LISA. You get 25% bonus from the government, and this is locked in until age 60. The second way is workplace pension via salary sacrifice, the most efficient one. Use gross salary to contribute more in your pension, and then by doing that, you save tax and national insurance, plus potential employer top-ups from national insurance savings. This is best for regular employment income. And third way is SIPP. This is ideal for self-employed or non-salary income. With SIPP, you get 20% to 45% tax relief on contributions. You also manage your own portfolio. And remember, If you qualify for the UK state pension in the future, that's just an extra money on top. More money for your luxury holidays during retirement. We all made huge sacrifices moving to the UK. You work hard for your money. But using LISA, salary sacrifice, or SIPP, you can let your money work harder for you. You deserve a secure, comfortable retirement. Start today. Open a LISA account, or maximize your pension contribution with your employer, or open an SIPP, whatever works for you. Take control of your finances. Pensions are a little bit complicated, so if you do have questions, drop them in the comments below. And don't forget to hit like and subscribe and share this with a fellow OFW. Thank you.